Hey everyone, this is John Feneck with the Feneck Commodities Report, and with me today is my YouTube partner, Don Durrett, founder of goldstockdata.com, a great source for gold, silver stocks, closing in on 1,000 different names that you tracked on. Crazy. I don't know how you do it, but awesome source, and people should definitely check that out. I've been a subscriber for, gosh, at least 3 or 4 years now. Don, we're going to have West Point Gold on here in a few minutes, which is WPGCF in the States and WPG in Canada. It's a new name for us. The chart looks very interesting. It seems to have made some nice higher highs and then sort of a steady decline right now. So I think there's a pretty decent entry point here, and be interested to hear your analysis in a few minutes. But before we get to that, let's talk about the macro situation. You and I have been talking about non-farm payrolls as something to watch now for at least, I'd say, 18 to 24 months. And when you start to see that decline, that would be kind of like a bell ringing, if you will, that you should be, if you aren't invested already, this is one of the last things to drop in terms of the economic metrics we look at. And you saw non-farm payrolls really disappoint on Friday, August 1st. Miss of Gosh, I think they missed by about 34,000 jobs, so 73K versus 107. But the real story was the revision down on the previous 2 months. And it seemed to take a little bit of time, right, for the market to kind of internalize this. But yesterday, August 4th, and today, August 5th, a lot of mining names really performed well. What do you take on this?
Yeah, you're absolutely right. We've been waiting for the jobs to roll over. That's kind of the last shoe to drop for before you get a recession is usually jobs. And this looks like it's going to be really difficult for the economy to kind of turn this around, if you will, because there really isn't any drivers other than lower rates. Trump's tax bill was really more of the same. I mean, he really didn't cut taxes. He did a depreciation, which will help a little bit. The tax on tips is really minor. And then the other one is the Social Security. Um, you get a bit of break there. But on the whole, there really isn't much stimulus in this tax package. So other than the rate cuts, is the rate cuts going to be enough? And then Powell, it seems like Powell wants to kind of reinflate this slowly. He doesn't want to do this. He doesn't want to really put the pedal to the metal here to drive the economy higher. So the economy is slowing down. There's no doubt about it. The PMIs have been, recessionary territory, and now the labor has caught up to the PMIs. I mean, the manufacturing PMIs have been sub 50 for 29 months in a row. So manufacturing has been fairly dead, and now consumer spending is really kind of slowing down. We've had no growth in retail sales this year. It's basically recessionary. So now here comes the labor, the last shoe to drop. I really felt that Friday, many respects, was kind of the bell ringing as far as a possible hard landing, possible recession. And so we're seeing that on Monday and Tuesday of this week, which I really feel that people have been ignoring the miners, but they're watching them. They have their eye on them, especially when you have these $1,000, $1,200, $1,400 margins per ounce. And so people are seeing that, and they're like, okay, how long can I ignore it? I mean, when you start seeing some of these reports out of Newmont, Anglo Gold, Ashanti, Ken Ross, you're seeing these really, really good releases, and it's like Wall Street's over there. They don't own any of them. They're like, how long can we ignore these? And I think all you needed was just a little bit of fear, a little bit of anxiety, a little bit of concern, and people are coming into the miners because you don't want to be super late. There's people are starting to nibble. I think Wall Street's starting to nibble a little bit. The follow through today was stunning to me, because last week I actually posted, we had a day where gold was up $70 and the HUI was up 5 points. And it was the same story we've been witnessing for the last month, for a year, right, where the miners just don't get any love. And then Friday, when that report came out, it all turned. And now we're getting gold was up like 10, $20, and then the HUI was up 20 points. The opposite, right? So, and then today we had that gold was not up that much, and we had significant follow through with the miners. I think we're over 460 now on the HUI. So it's really interesting to see what kind of follow through we're going to get here. But it's starting to feel a lot like 2003, 2004 to me, when you had this split where the miners started outperforming the stock market, and the miners would perform with just a little bit of gold. Gold would be up a little bit, and the miners would be up a lot. Well, that's kind of what we saw the last 2 days. So it's starting to feel a little bit like that, that was the beginning of the bull market, early 2000s. And so hopefully that's what we're seeing here. But I still feel that a crash is coming on the stock market. Not a correction, not a 5 to 7% correction like Wall Street wants, a 20% crash. I think that's what's coming. So gold and silver are going to have to fade that headwind. So that's kind of the unknown.
Yeah, absolutely. And as we pointed out on our last podcast, seasonal weakness for the broad market has always been September, October, and that's what we're entering into here. So, I do talk to a lot of portfolio managers that manage regular, if you will, type mutual funds, not in our sector. And I can tell they're very nervous right now, just in their voice after getting to know them for many years, about continuing to have to buy beta here, buy risk to keep up with the broad market's returns. And it is going to end badly because there's going to be a lot of news around the fact that there's heavy concentration in certain names. This happened in '08. If people don't believe me, go back and look at Citibank, go back and look at Washington Mutual. A lot of these names were heavily, heavily overowned going into '09, and everything just ended really badly. The difference this time is you've got two different things. One is a lot of people have their money in the stock market where they may have not had it there then. And secondly, you've got huge, huge velocity versus the '08-'09 correction with algorithmic buying and selling. So I think things can happen a lot faster. And using that recent snippet of the April, 2nd, was it, the Liberation Day kind of week, if you will, that was pretty ridiculous in terms of speed and velocity. And thankfully we recovered if you're an S&P or a NASDAQ holder, but there's no guarantees. We can't always see a chart that continues to, buy the dip, if you will. There's going to come a time when the dip doesn't get bought. And I think we're entering that period here in the next 6 months. And you and I have been arguing as early as September, October. So we'll see. I wanted to point out something. As you track the HUI, I track GDX. GDX is very quietly at a 10 plus year high right now on the close today. I mean, it's like doing pretty well versus other asset classes, right? But it doesn't feel like it because we still don't see the massive fund flows we're all expecting. But that will come, folks. I mean, if you're looking at gold, it isn't giving anything back. I mean, we're not seeing a test of 3,000, then a back to 3,300, and a back to 3,000. This thing's just holding right in there as a commodity. And then the miners are now starting to catch up. That's what Don is saying in terms of the leverage that the miners have to the underlying price of gold. And we haven't seen that kind of action, Don, for many, many months, but now we're starting to see it. I saw silver up like 1% a few days ago, and a lot of the miners in silver were up 4 to 7%. That's the kind of stuff you want to see. That's the kind of action we saw in 2016 as First Majestic, Core, Hecla, they all just took off, and they did so for months. So hopefully we're going to get that kind of a continued rally here.
Yeah. A couple things. I pointed out that the Buffett indicator, Warren Buffett's in like $350 billion in cash. And the reason why is because his favorite indicator is at an all-time high. And he's been around for so long that he knows that the market's overvalued and you got to be careful. You got to get out of the way, basically. So he's sitting on all that cash because, he's highly confident that something bad's going to happen. And everybody that thinks that we're going to get, a soft landing or a no landing, and Buffett's going to be forced to spend his cash chasing stuff. I don't think that's going to be the outcome here. I think Buffett's going to be sitting on all that cash when this thing crashes. He's going to be basically buying stuff pennies on the dollar like he usually does. I think that's a big tell, if you will. The other
Yeah.
thing is that this market is really 15 plus years in. You can't, I don't think you can say that had a reset in 2020, that basically the business cycle, we had a recession in 2020 and then it reset and now we're on a new one. That's baloney. There was no recession in 2020. Look at the stock market in 2020. It was raging. There's not a recession. We haven't had one. And so we're 15 plus years in. The only reason why economists are saying that is because they don't want to have to acknowledge that this is the longest expansion in over 100 years. Let's put it that way. It's never happened before. You had a 15 plus year expansion. So we're overdue for recession. I think it's coming. So that I don't think we can ignore that. It's like you said, people are calling you and they're nervous. I think people are starting to recognize, uh-oh, here it comes kind of thing. Is it going to be 1 month, 2 months, 6 months from now? We don't know. It's hard to predict timing on this, but I think the odds are really increasing rapidly that that's going to be the outcome.
Yeah.
But one final thought is how cheap the miners are. You mentioned GDX near a 10-year high, but not an all-time high. It's still way below where it was in 2011. But gold is way above its all-time high. It was in 1935 in 2011. Today's at 3,400. I mean, it's massive upside in gold on an all-time high, but the miners have not caught up. And the majors are going to leave here. It is amazing how many majors are 4-baggers, 6-baggers, and 8-baggers. You can find majors that have 8-bagger upside right now, which is absolutely insane. But quite a few at 6-baggers and just about all of them at 4-baggers. Now that's at $5,000 gold, but I don't think $5,000 gold is a stretch at all. I think we should expect $5,000 gold. So all these miners, they're going to have the same returns that the S&P had from 2009 to 2000 to today. So it's going to be a complete reversal. Now we're going to see the miners do what they did. So they had their 15-year run, but it's going to be condensed for us. We're going to have the same returns over 36 months is my expectation.
Right. And that's that velocity that I was talking about. People don't know how to buy our sector, right? When you look at smart analysts across the stock markets globally, they don't know how to buy our sector. It's a 0.1% weighting of the global stock market. It's like, I see people piling into AEM, today, and it's like clearly someone thinking it's a large cap, and it's not a large cap, right? It's not a large cap by large cap standards. And so things move a lot more quickly than you think. And that really bodes well for the micro cap and small cap stuff, which you and I play in a lot, is that these names just haven't moved yet. And when you start to get some real fund flow, it gets interesting. So I think we'll leave it there. But thanks, Don, for the comments. Wanted to introduce Quentin Mai right now, who is the CEO of West Point Gold. Hey, Quentin.
Good day, sir. How are you?
Good,
Yep.
Thanks.
Welcome, Quentin.
Hey, thank you so much, Don.
So Don and I haven't interviewed you with you before, but we're intrigued by the chart and the story. And if you'd be kind enough to give us 7 to 8 minutes on the story, and we'll ask some questions, please.
West Point Gold has 3 assets in the Walker Lane district in the southern, border of state line of Nevada. It just noses into Arizona a little bit. The reason we like this area so much is because essentially most people that follow our sector, specifically the large caps like Barrick and Newmont, are really essentially been made by the Carlin Trend in the northern part of the state. The southern part of the state, the Walker Lane, has really not had the same kind of work. It's got a lot of smoke, meaning historical projects that were mined 100 plus years ago. So there's gold there. But the number of large-scale kind of world-class assets has really been, up until recently, Round Mountain that Kinross has been mining for some time now, 20 million ounce deposit, of which we have a project just 7 kilometers due east of that called Jefferson Canyon. In the center part of the Walker Lane there, you can see Anglo Gold Ashanti, which is at about 15 million ounces right now, looking like it's going to be 20 or more million ounces. That's a recent discovery, and that's actually out of my last company, which was Corvus Gold, which of course I mentioned there at the start. And that Corvus Gold was bought by Anglo in 2022 for just over $400 million. It was just over around 4 million ounces at the time. Anglo has got a massive discovery there, and they've actually essentially relocated the company out of South Africa into the US and moved their head offices to Denver specifically to develop this asset, which they've put almost $1 billion into the area. So now you're starting to see world-class investments going on in the Walker Lane. And I think it's really taking more attention from the sector of what else could be there, which is what we're doing right now. So what I joined Gold, I joined West Point Gold about 12 months ago. And essentially, it was that leverage from the Corvus Gold story and the Anglo buyout that actually got me interested in this project. It had essentially 4 years of work on it without a lot of drilling, but the drilling that had been done, just 1,000 meters at that point, was incredibly significant. And the hole that really got me interested was this hole 28 that was drilled in 2023, which was 86 meters at 6 grams. And that was mineralized from surface to the end of the hole. And the last part of the hole was 9 meters of over 50 grams. So you're looking at many hundreds of grams per meter on this. So the intercept was fantastic. It got me pretty excited. And what I did was I invited a geologist I know that was Corvus Gold site geo and had been working on the Walker Lane for over 20 years. Brought him down. His name is Mark Reichman. Had him take a look at the gold chain with me, and he was bouncing around saying he sees this as an analogy for what Anglo had discovered north of the Corvus project called Bullfrog and Silicon and Merlin, which is actually where the bulk of those ounces are coming out of now. So when you start to see someone who's got a geologist with this much time in the area getting that excited about a project and the upside potential, I was thinking I want to be involved in this company, and was able to help them do a raise back in the fall. And we subsequently did a 6,000 meter drill program and had some pretty compelling results. So that project there, as you can see, is just in the southeast corner of the Walker Lane, just over the state line, and it's actually about 10 or 15 minutes outside of Lake Mead, and you're next to the town of Bullhead City in Arizona. So if you take a look at this project here, you've got a large epithermal low sulfidation gold system here in the Oatman district. It was mined historically 100 plus years ago. You had most of the mining that was done there was at least half an ounce. It went to about 200 meters in depth at some of the most deepest places. So you've got gold showings around a whole district that's traditionally a mining district. And as I've discovered, working in Arizona is actually even a little bit better than working in Nevada, because we've got a very supportive BLM with respect to permitting. We've got water rights in Arizona that are actually a little bit different than Nevada, where with respect to water rights, you actually need to get water usage in Nevada and actually purchase the water. But in Arizona, you can actually have water usage with patented mining ground. And as you can see on that land package on the map that I've just put up there, the black line is the BLM, but the kind of the star-shaped white part, the patented core, the ground on that, actually the water underneath that actually could be used for mining. So you actually have solved a pretty significant problem that actually is a little bit more challenging to permit when you're on the other side of the state line in Nevada. You've also got infrastructure. You've got a 4-lane highway going right past you and a high-tension power line. And you've got the town of Bullhead City nearby, and you can see on the map there, you've got a McDonald's, a Lowe's, and Starbucks. So you can basically be drinking your coffee and arrive at the site in 10 minutes. So you're dealing with the infrastructure that is probably as strong as you could find anywhere in the world. So when you start to take a look at the system, and what got us so interesting is you can see on the map there, you've got a lot of those historical mining of the axes and the shovels, which is where the mining was done over 100 years ago. And this whole land package has only recently been put together by our site geo, Rob Johansson, who's got over 35 years experience in epithermal systems. So Rob saw this as an opportunity, and he went around over several years collecting all the different patent holders and put this land package together, basically just to look at it as one model that no one's ever been able to do before. And so essentially what we've got here is 3.4 kilometer structure that's historically been mined anywhere from a third to a half an ounce and somewhere up to an ounce, historically, with all the workings still there and the tailings from the historical. And essentially what was happening before I joined and before we became West Point Gold and the predecessor, they did 1,000 meters of drilling. And essentially, the two top targets were, if you can look in the inset map there on the patented ground, Tyro and Banner. These were historical mine workings, and essentially the surface expression of this structure was at Tyro. So along that 3.4 kilometer structure that we're looking at of historical workings, the Tyro is about a kilometer long of superficial expression, which essentially became the obvious target to drill first. So really all of the work, the lion's share of the work that we've done so far has really just been on Tyro. So when I say we did 6,000 meters of drilling, there was 1,000 before. So there's really only 7,000 meters of drilling done, 6 of it in the last 7 or 8 months. And we're really just starting to understand this system as we're digging into just that superficial section, the Tyro vein. So here you've got some of the highlights, and you can see on this section there, the 23 holes that were done by the predecessor for West Point, the 24, those green stars there, those are the holes that were done by us with core drilling. And it was the first time we'd actually gone in with a core drill to actually figure out how the structure was set up over the kilometer length. And you can see it's about a 20 to 40 meter long structure. It's from the southwest to the northeast trending. It's very consistent, very contiguous. And as you can work your way down the results that you can see on that chart, specifically those 47, 48, 49, you can see you've got some incredibly robust grade that no one else is seeing that I can recall in North America anytime recently. And this is fantastic. It's open pit depth, it's from surface. And so far from the most recent baseline metallurgy we've been doing, everything looks oxide so far. So essentially what we're looking at right now is you've got a very high grade portion for 200 meters at the north between those holes 47, 48, 49. And as you work your way south, you can see, as I mentioned at the outset, that hole 28, there was a second from the top there. That hole was drilled in 2023. It came out in March. The stock actually dropped on those results, believe it or not, because as you were saying before we signed on, there wasn't much of a gold market before the last 12 months, and we still haven't seen the kind of investment in. So the market didn't really buy into that and help that story get any kind of traction, which is where the opportunity for us came in, is that we've got this advanced development asset with open pit, very high grade, and some of the best results you're going to see in, I think, anywhere in North America right now, with a highway going right past it. So giving you an idea just of what those cross sections look like, of 40, you can see 48, 49, and the other one down here, which is a little bit further south. But it's just giving you an idea of, you've got this epithermal system with the breccia, and you've got these high grade intercepts here in the middle. And as you can see, this is all very close to depth, to surface and open pitable depths. This is an old mining shaft right here on this hole 24. So this came out late in the year, and you can see this hole here, a hole 24, which was last year. We drilled this in October, November. The results came out in January, 89 meters of a gram, but you can see in the middle of that 36 meters of 2 grams right there. And that essentially went right down through an old mining shaft, which was actually open pit mined in the 80s. At a 2 gram basically, and you can see some of the grade there just goes consistently down, and you've got a hard stop on the mineralization at the footwall on the north west side of it, and on the southeast side of it you've got a hanging wall, which we discovered through those core drilling, that you've got this porous rock that actually allowed the gold to leach higher up and closer to surface. So here we are just at 7 meters from surface here, and you've got this wonderful broad economic intercept here right through an old mining shaft that was mining, as in those days it would have been at least half an ounce, which is in the middle of a 20 to 40 meters of 2 grams, which, as we know in the modern day, is an extremely and exceptionally economic deposit, especially from surface. And then in the middle of that, 89 meters of just over a gram. So this is what's giving you an idea. And this is on the southern end of that, which is down this south end down here. But if you head up to the northern part of it, you can actually see up here, that's where these holes were, the 47, 48, and 49, which actually have those exceptional grade holes, that, again, right near the surface. So looking at the long section of this, you can see the high grade. This is just a 200-meter block. It's actually open at depth. We've not drilled off the patented ground yet. That's what we're going to address in the upcoming drill program. But the first thing we want to do is start drilling this to see just how deep this goes, because judging by the district, there should be at least 300 meters of this kind of grade on the northern end of this. And as you can see, the interesting thing about this project is we've drilled about 150 to 200 meters across the structure here from the south to the northern end of it up here. The southern end, as you can see, the grade tends to stretch out, where you've got these broader 75, 80 meter intercepts of the gram range, or 0.9 to a gram or so. But what's interesting about this is, as we're learning, is that, as I mentioned, there's this whole 28 down here that had 86 meters of 6. We've tried to recreate that and not been able to, but the theory that our geologist is working on right now is that this is actually higher up in the system, and that there's another one of these high grade sections that actually is underneath this. So when we get back to this in the fall on the next drill program, we actually want to drill this deeper, because we believe we might be able to find some of this kind of grade down here underneath this high grade. This map actually is or this picture, I should say, is giving you just an idea. These holes right here is the shaft that was on that previous map right there. So it's just basically showing you that this was a pit that was mined in the 80s at 2 grams. You can see the footwall is over on this side, the north side, and on the southern side, you can see all the mineralization here. That was actually the hanging wall. And so these are some of our trenches in the foreground in that pit right there. And so you're seeing a good idea of what the topography looks like just outside of Bullhead City there in Arizona. And so where the story gets interesting, and as I started out with the 3.4 kilometer system and the structure, is the Tyro mine is really on the superficial expression of that. But what's interesting is you've got a lot of historical workings along the structure that go along here. And you can see these are all tailings dump samples that our geos took. Basically, that was mined 100 years ago. You can see you got 2 ounces of waste rock sitting right beside an old mining shaft. Where we think it's going to get interesting is down here on the Sunset vein, which is actually, we believe, is actually the Tyro vein is the superficial expression. You've got the fault structure along here, the Sheep Trail, and then on the other side of it, you've got the Sunset vein down here. So we think that's a continuation of that. It was drilled in 2021. You can see 3 meters of 10 grams, but they essentially felt that they drilled above the system, and that's something we're going to go in and chase deeper in the fall. So essentially, just to kind of preempt any questions you might have about our upcoming drill program, we're going to get in there and start trying to look at the depth of what's happening at Tyro Mine and the high grade on the northern section. But we're also want to get some holes down here in the Sunset area, because we think we might see a continuation on those structures down here. So where things get interesting for me and my background with Corvus Gold is the Frisco Graben up here. And that's actually, as I mentioned at the outset, Anglo has got 15 plus million ounces at a graben that's north of what Corvus's projects were. What was different is Corvus never had the graben. Anglo took that ground, drilled it, and started hitting these massive intercepts of gold, which is the reason they consolidated the district. What's different now is West Point actually has the graben. And so when I first came to site last June, when I was vetting the deal, I brought Mark Reichman along, who actually had worked at Anglo. He'd been at Corvus for the entire 11 years from 2011 to 22 when it got bought. And he was the only employee of Corvus Gold that actually got hired by Anglo to continue working there. And he spent another year with Anglo before he retired. He just said it was the big company politics and whatnot. But he came in and said Anglo would be drilling Frisco Graben before they'd even be drilling the Tyro. He said, this is their target. This is their elephant country. And if the gold came from anywhere, this is where the gold probably came from. And so basically just giving you an idea of what the structure looks like from the image, you can see the Tyro vein along here. And then you go right up along the structure right here where you've got the Frisco mine fault and the Tyro extension continues up here. So the geologists, as we know, they love structures, and that's where gold tends to collect. And this is what makes this green section right here is kind of what makes the most sense to the geologists of where to put some holes in the ground. So we, in the middle of our Tyro drill program, we realized we're going to need 15 to 20 holes here just to try to figure something out of where it may came from. It's a blind target. There's no mining along here. There's no historical anything along here to give us a smoke of where it might come from other than the structures. So we put 4 holes into this, one right here from this green, that one right there, one from this pad and one from that the other direction from that pad, just trying to see if we could get lucky and try to see if we could hit the structure and hopefully it was mineralized and see what we could learn. And so essentially we're imminently going to be putting out the results from that hole, those holes, I should say, purely and simply just to give us a little bit of an idea of what might be happening, where the system might be originating.
I think
have I used up my
Quentin,
7 minutes, or do you want to do you have some questions for me?
yeah, Don, I'll turn it over to you first because I just don't want to run out of time, and then we can try to fill in any blanks.
Sounds great.
Thank you.
So my first question is your market cap. So I have you 65 million outstanding shares, 96 fully diluted, with a $23 million market cap fully diluted. Is that correct? Well, it's actually grown a little bit, 88,124. So that's correct?
Yeah, essentially that is the market cap. I'm assuming, are you talking Canadian or US actually? I guess
US.
Yeah, that's accurate for the US. So yeah, so basically the stock has come under pressure since we closed the financing at the beginning of June.
Right. So you're about $30 million then, fully diluted US?
Fully diluted right now is 123 million shares.
Right. But the market cap, about 30 million US?
Yeah, a little over, but fully diluted market cap, the issued and outstanding, yeah, would be in that range.
Okay. So my first question is your drilling programs for the next, I don't know, 2 to 3 years. How many meters do you guys plan to drill 25, 26, and 27 if you planned it out?
Well, one of the things, just to kind of corroborate back to what I was talking about at the start with respect to Tyro, is Tyro, we've got a model at Tyro, and as you can see in the top left part of that map, there are 15 million to 31 million tons at 1.5 to 2.5 grams, and that's a superficial open pit. The structure is 1 kilometer long. We're presuming to 200 to 300 meters because that's what the district has been telling us of what the mineralization ends at. So what we've been doing, I'm calling it conscientious drilling, where the first part of the program, I'm going to kind of answer your question more specifically, is we're kind of learning as we go. And so to answer your question is, right now we're planned 10,000 meters for the next leg of the program, which will start in the kind of the first week of September. And we're going to do a shallow drill program of about 1,000 meters right along the spine of Tyro, all shallow holes, basically just to tie everything together. That would put us in a position to have of what the upper section of this looks like for potentially M&I. So it's just getting a really good idea of what the resource is going to look like by doing these holes. We could do them later, but we want to do them now because that's our best way to get in there and actually start giving us mineralization and good results for developing this project to the next level. The second part of the program is more of a deeper with a bigger drill, is going to be we're going to put 3 holes in right below this northern section right here. And essentially that's going to tell us, we're just going to start walking our way deeper to see how deep this goes. So 50 meters, if we can, 75 meters, and just try to get an idea. This is 200 meters across and 200 meters deep right now. But if it goes another 100 meters more, you can imagine the amount of tons we're going to get at multiple grams. So this is really going to be driving any kind of economics that are going to be coming on this down the road. So we'll drill those holes, and then we're going to go back over to, as I mentioned to you, the sunset, do some holes over here, see what comes out of those holes at Tyro, and then go back into here. So I know I'm giving you a long-winded answer, but basically what we're trying to do is we're trying to drill and learn so that we can make the most effective drill program for us to learn. So the plan generally is 10,000 meters. We're going to be drilling Tyro. We're going to go to some of the outlying targets off this Tyro structure, come back and drill more and see how deep that goes. Also, continue along the structure, because there's some pretty compelling targets actually on the upper section of this too, because we've actually had a chance in the last 6 months to actually map the entire land package now, which they hadn't been able to do this northwestern section either. So I apologize for the long-winded answer, but it's essentially right now what we have structured is 10,000 meters, which is going to take us probably until the spring of next year. If we hit at Sunset Vein, then I would expect a second drill to come on in a much expanded program. But right now, what's in the budget is 10,000 meters. It'll take us roughly 10 months out from here.
Okay, so you said that your estimates about currently what you think you have is 30 million tons. I did a back of a napkin. I came in about 18 million tons, which at 1 gram would be 600,000 ounces. But it looks like your grade is higher than 1 gram. So
yeah,
if you did 2 grams, it would be 1 million plus. Yeah. But if you got 30 million tons, you'd be 1.5 million ounces. So ballpark, you kind of already found 1 million ounces, it looks like. And some of these projects, I mean, if we look at North Bullfrog and Round Mountain, those are massive mines. So, I mean, do you guys have targets? I mean, this 1 million, 1.5 million ounces that looks like you've already found, it looks like kind of a starting point. So that's kind of why I was asking you kind of your drill program. So
yeah,
how long do you guys plan to drill this? I mean, do you guys have like an idea, like it's going to take a while, right, for you to understand the size of this property?
The way we're kind of saying it is the Tyro structure, the Tyro mine is essentially what we're calling the obvious target, because it's the superficial expression of the mineralization. We're going to drill that and continue to drill that just to figure out the depth of it, and potentially, if we get lucky, maybe hit another high-grade zone below on the southern end of it, which could really blow the doors off that model we've got. But as mentioned, we've got some incredibly compelling targets along Banner and Sheep Trail, Sunset, Sunrise, and which ostensibly are an extension of Tyro, which means we could be adding to those ounces significantly. And we want to find that out. And hopefully we're going to be able to find some successful and economic intercepts when we put some holes into that. As I mentioned to you, right now we're dealing it's kind of like when you've got a treasure, you're trying to, if I pull 2 drills on the project right now from the get-go, which would be the obvious thing to do, because we've got Tyro to drill to see how big it is, and then some of the other targets. But we also want to be conscientious for the treasury as well. And so with that being said, the best way to do that for us is to actually go in, drill, as I mentioned to you, the Tyro targets deeper. If those hit, then we know we can do another fence below that. We can also go do some more at the southern end of that. And then, as mentioned, we'll be mixing in some of the exploration targets on that as well. And right. As I mentioned, if we get any snifter of economic mineralized intercepts at some of the other targets, that would be the impetus to bring a second drill on.
Right. I can see your experience. I mean, you're doing a great job evading the question. I mean, fantastic job. I mean, I understand. I mean, the more experience you have, the better. You're like a professional politician. You're great at, because you just don't want to. It's very difficult for you to give your true opinion, what you really think. I know you're kind of keeping it all close to the vest, if you will. So, I mean, you're looking at this property and you're seeing the potential, and all you're telling me is the potential. I mean, you're telling me the drill targets, there's this. But what I want you to tell me is how excited you are about the overall size that it could be. Because, I mean, that's what's going to get investors excited. I mean, like I said, you found at least 1 million ounces, probably 1.5. But what you're not telling us, what you're kind of evading, is you're not telling us that that's the tip of the iceberg. And that's what I want you to talk about. Why is it the tip of the iceberg?
Well, as I mentioned to you, it's the compelling evidence, and the arrows are the historic workings, which are showing, as you can see, anywhere from a third of an ounce to 2 ounces of gold in some of the waste rock around old mining shafts. We're dealing with a consistent structure. The superficial expression of that tyro, and then the potential for where it all originated with the Frisco Graben. And the best analogy I can give you for how excited I am is there's 25 million ounces up the road at the project that Anglo Gold Ashanti just is consolidating. So I mean that's my level of excitement, is that I've got a geologist that worked on that project for 12 years that says this is about as good an analogy if I've ever seen for that on the Walker Lane. That to me is as compelling and as excited as I can give you without saying to you how big I think it could be, because Anglo has 25 million ounces up the road at the outside of Beatty, Nevada, on what ostensibly is an analogy for this.
Right. Okay.
Quentin, how far up the road is that in kilometers or miles, and also what is Walker Lane like in terms of costs, right? Like, what could you share a little bit about that per? Because I saw briefly on the screen that you showed us about 9 to 10 million in cash.
Sure.
You know, how much is it going to cost to execute the plan?
Basically, the first question is Beatty, Nevada is 90 miles northwest of Las Vegas, and we are 90 miles southeast of Las Vegas. So it's exactly, I thought the mileage was actually quite interesting, that it was exact. So it's basically 180 miles if you do 90 plus 90 and along a 4-lane highway. Okay. The drilling, core drilling is just over $300 all in. And RC drilling is in that one kind of 80, 200 range. So we've done only 1,000 meters of core so far, which gave us an idea of the structure, which gave us a lot of information how to maximize the RC. And so essentially the drilling we're doing, at least budgeting right now, is most RC or reverse circulation. So as mentioned, if we do get some joy at some of the other targets, then we'd have an impetus to bring in a core rig just to get some idea of the structure. But right now we're just trying to be very conscientious of cost and really figure out what we've got. As mentioned, this had only had 1,000 meters of drilling on it 10 months ago. It's now got 7,000 meters of drilling on it. And now we're consolidating all that data as we speak, so that we come back in the fall and we can handle a 10,000 meter drill program and actually have that model up to date as we do the work. So we're actually getting an idea of how this is rolling out. So, this was basically 2 people's shop up until 10 months ago. So the critical mass of this company is really expanding very rapidly right now. So if and as mentioned, we only just a month ago got a core shack in the town of Bullhead City. So we're kind of, again, bringing all the disparate pieces we need to actually grow, kind of expand exponentially, should we make it some kind of discovery that's going to warrant the need of expanding quickly. So getting the people in place and all the infrastructure put in place. Okay.
Yeah, Don and I live in Arizona, so we know I know that area quite well. The infrastructure is outstanding up there. The insider ownership at 6.4 on this slide. Can you just talk? This will be my last question, just in the interest of time. But the insider ownership at 6.4. Can you add that to other people? Funds or institutions, and kind of give us a number as to how many of those 123 fully diluted shares are held in good hands.
The financing we just closed was of $9 million or $8 million, I should say. Just over 6.5 of it was institutional. So the lion's share of it came out of Feneck, 2 different funds at Feneck. And so, Joe Foster at Feneck, when he saw those results from the high grade at the northern end of Tyro, basically said, drill that, drill that, drill that. And so they did, Feneck, that is, was $2.5 million US of that financing. So they own basically 10% of the company now.
Great.
There's another couple of funds with smaller positions, but that's the lion's share. Kinross owns about 2% with the joint venture on the Jefferson Canyon project in Nevada, the one that's right next to Round Mountain. And so yeah, there's basically good hands for around 30 or so percent with respect to the institutional, the insider, and as mentioned, Kinross's ownership.
Great. Okay. I think we'll leave it there, Don, because
Well,
you and you have one more.
Yeah, I have two quick questions. The first one is, do you have any NSRs on the property?
Yes, I actually have a slide on that. They're kind of intermittent to different parts of it. There it is. So it's actually on the PowerPoint, which would give you the best breakdown of it.
Okay, that's not a problem. 2% can be bought back. Okay, that's not a problem. All right. So my final question is, how much time, for instance, if a company, you're the CEO of the company. So let's say that Anglo Gold basically, their geologist basically takes a look at your drill holes and gets excited and tells his company, you got to buy this tomorrow. And they basically come in and take you out. I mean, how disappointed are you going to be? How much? And my second question is, how much time do you want personally? How much time do you want to drill this so you have an idea of the size?
I think we're going to have a pretty clear idea over the next 10,000 meters, because essentially what we're going to be able to figure out, we believe, is the depth of that high grade section of the north, if we've got any joy in the south, and most importantly, and the two biggest questions are the extension across the structure over where, as I mentioned to you, sunrise and sunset, and also the Graben up to the north. And we've put 4 holes into it, and we know we need to drill 15 or 20. So getting those holes is really probably would assumably happen over the next drill program. And that would essentially, to me, be the impetus. And I hope the market has given us a lot more joy than it has recently, and obviously driven the share price up, because I would presume our valuation would be a whole lot higher than 25 or 30 million. So if you ask how disappointed I'd be, it would be pretty disappointed if it happened based on the current pricing right now.
Okay. All right. Thanks for telling us the story. It's a very good one. Very good one.
All right. Thanks, gentlemen. You have a great
Thanks a lot, Quentin. We appreciate your time. So, Don, we only have like 4 to 5 minutes here. Why don't you give us your assessment?
Yeah, clearly it's a good drill story. I mean, $30 million. I think it looks like it's going to be, $2+ million deposit, could be $5 million plus. So it's difficult to get it to know how big it's going to be, but at 2 million is probably at least a 3-bagger. So I think it's probably a minimum 3-bagger, but is it a 5+ bagger at this time? If the insiders were higher, let's say they had 30% insiders, it would be a lot juicier. But with their low insiders at 6%, Anglo or Kinross can buy this anytime they want to. So that concerns me. But on the whole, I mean, the grade is outstanding. The grade is outstanding. One drill hole after another at 1 gram plus. So I love the grade, love the location. Fantastic. So those two things are total check marks. Getting bigger in size, very undervalued. The only check box that that it doesn't really check is the insiders. That's my only issue with it.
Yeah, I like that Feneck owns 10% because Joe's team, they don't trade. I mean, because it's not in GDX or GDXJ, so it wouldn't be subject to the parameters of those ETFs. So it's probably in an open-ended fund, which is good because that's probably actively managed and isn't subject to just getting thrown out on a metric. But yeah, we would like to see more insider ownership. But right there on the 30 mark, it's not terrible. And I like that he has experience in that part of the world. And so does his Geo buddy Mark, because that is a huge deposit there.
The one thing that's impressive about his presentation was the fact that they've really got a really good understanding of this project really quickly.
Yeah.
If you look at their drill holes, they've done a really good job of picking where to drill and So that's impressive. So these guys are good explorers. The fact that he said that he's going to get a good idea on his second drill program. I mean, they just start drilling this thing. His second drill program, he feels like he's going to get an understanding. That's very impressive. A lot of these companies, they don't. That doesn't happen. Two drill programs, and they got a grasp of the deposit. So that's impressive.
Yep. Well, we'll leave it there, everyone. Thanks a lot for tuning in. We're gonna be back with something else later this week, and we thank you for joining us. Take care.
All right.